All right, welcome back to Lunch of the Market on the eve of options expiration or OPEX. This morning was fantastic for opportunities with both Itron, ITRI, and NTAP or NetApp taking a dive on the open. The opportunity, though, at least for now, is really over. Thankfully, we tweeted out these moves when we sold the ITRI March 55.50 put spreads and the NTAP March 50.45 put spreads. We sold the NTAP March 50.45 put spreads for about 95 cents, and they're only worth about 55 cents right now. So if you're quick, if you're a trader, if you're in and out of these things, you can go ahead and take the 38% gain that we got you this morning, take your chips, go buy a sweater. It's not our style to do that, so we'll stay short until we capture 100% of the 95-cent profit. Now, on Itron, we sold the March 55.50 put spread for about $1, and you can only get about 90 cents for it now. And we added the August 2011 50-55 call spreads for about $3. You have to pay about $3.15 for them now if you want to do that. Okay, Itron, ITRI, is a name that we've had on our radar for some time now. We were actually looking for an opportunity or pullback to get long exposure. This morning was that opportunity, and it's really right around there right now if you still wanted to get in. This company from Liberty Lake, Washington, trades with a forward PE of only 13.13 and a PEG of 0.89. That's less than the magic number. Anytime we see a PEG of less than 1 here at Magnum Opus Financial, that's our magic number. We love that. A PEG of less than 1. What that means is you're paying not very much for growth. A PEG of 2 means you're probably getting to the later innings of growth, and it's getting a little expensive. If you pay like 4 or 5 PEG, right, which is PE divided by growth. So if you're paying, 4 or 5 times the growth rate or the PE, right, for growth, it's really expensive growth. So anytime you can get a PEG ratio of less than 1, we really like it, especially when that's coupled with a PE that's less than 15, which ITRI has on both categories. Okay, it also has $3.67 per share in cash and about 100 and let me see the number. See if I can find that. It's got about $121 million in levered free cash flow. So, right, net of debt, they've got $121 million in free cash flow, which is fantastic. The company's levered about 4 to 1. We don't get nervous on leverage until one of two things. Either A, they're levered more than 10 to 1. That gets us really nervous. And B, if they have terrific free cash flow, then we're also comfortable with the company having a little bit of leverage in their balance sheet. It's just economically positive, especially in a low rate scenario like we are right now. It's really a smart thing to do to issue debt and then really just keep cheap debt on the balance sheet to finance growth opportunities. Now, what does Itron do? If you've never heard of the Itron story, they do meters and smart meters for things like gas companies, water companies, electrical companies, right? So it does two things. It lets the consumer do a better job controlling their consumption of energy. And for the producers of energy or the distributors of energy, it allows them to track and maintain the billing, for accurate billing for their customers, right? So they can track all these things electronically from a central station that allows for more effective control of the business because they can do it through technology as opposed to sending out a person to check the meter. You remember when they used to do that? You used to have people come over and check your meter periodically to see, where the meter was at. With the smart meters, they can do all that stuff remotely, which gives them economies of scale, higher margins, all of that. So Itron, ITRI, is a really innovative way to play the future of energy. As energy gets smarter, as energy usage gets smarter, Itron is a huge beneficiary of that business, and we really like them. And the valuation on the company really shows that the story has not played out yet. Right, this thing could be fully valued at, say, 15 times forward earnings, and it's only trading at 13 times right now. And then the PEG could get all the way up to 1.9 or 2 before we're really paying too much for growth. So take a look at ITRI. If you're a stock person, now's not a bad time to add to a position if you have a higher cost basis, initiate a position if you have no position, and if you actually have a position, consider buying in the money January 2012 or 2013 calls instead of lumping out, basically $5,000 for a round lot. consider paying around $1,200 or $1,500 for a deep in the money call option that expires a year or two out. I think it's a better, more efficient use of capital. And then if the stock does have a second or third or fourth day of selling, then you won't feel like you paid too much for it, right? Because your exposure will be really limited to just what you paid for that call. And because it's in the money and it's out so far, you're not going to experience theta like you would in a front month. Okay, the front month is just the month that expires next. So our front month is February. It expires tomorrow. So consider those plays. Now, just a note to Apple shareholders. If you're long Apple stock, please listen up. Just today, right, there's mention, rumors, whatever you want to call about Steve Jobs' health. And on that, the stock is down about $5 in really and otherwise really nice, well-acting tape. There's very few things on our screen that are down 1%. I see Southern Copper, Salesforce.com, and F5. Other than that, Apple's the biggest loss on our screen right now. And it's a pretty good tape. You know, Akamai's up, Amazon's up, Netflix, Cree, Vico, Deck, Lululemon, Chipotle, all of those are up. So just be careful out there. What are we doing? We like the July 370, 355 caller. If you're long the stock, you sell the 370 call against it and use the proceeds to buy the 355 put, gets you all the way out to July. It's going to do two things for you. If something was to happen to Steve Jobs that's very serious and he's permanently no longer the CEO of Apple, you're going to be protected. Okay, you can hit that red button at 355 if the stock goes below that. Make somebody on the other side of your trade take your long stock, and you're out. Right? There's only, with the stock trading at 358, you only have to give up $3 worth of upside, or you have to give up $3 before your protection kicks into place. Now, on the other side of it, look, if the stock runs up to 370, people, right? At some point, the stock's going to go the other way, or something we can't see is going to happen, or seasonal weakness, right? Just from May into the summer. So we really like the July 370, 355 caller. There's your long stock. Boom, boom, you're collared, right? It's got a ring right around your stock, just like the collar of your shirt has a ring right around your neck. That way you're protected. You still got additional upside. You're not giving away the farm. And with the short call, you can always roll that out or out and up if you want to continue to maintain exposure in Apple. But again, going all the way out to July gives you many months so you can sleep at night and not worry about it. And again, you got $15 worth or $12 worth of upside to that 370, so that should make you sleep as well. All right. Thanks for tuning in again today. You can follow us on Twitter for the most up-to-date information. Obviously, by the time you see Lunch at the Market, some of the trades have already happened. So a good way to keep totally up-to-date is to follow us on Twitter. You're going to get those updates real time. And then don't forget to check stockpicker.com if you ever want to review an episode of Lunch at the Market. They publish it in print every day at stockpicker.com. And then for all the different various things that we do, don't forget to check out the Magnum Opus Financial Facebook page where all that content is aggregated, and you can like our company, and then you'll get updates through your Facebook stream as well, which means that you'll probably get the updates on your mobile phone. All right, thanks for joining us again today. Have a great day, and we'll see you tomorrow for Christmas. Options expiration, which will feel like Christmas if you're short, and you're right. Thanks for joining us again. We'll see you tomorrow.